they're saying, am I crazy because I cannot afford anything? Well, don't worry about it. They cannot afford it either. All right, so everyone is broke, but they are looking rich. So this is the Canadian real estate market, and we will unfold a couple of graphs and what Bank of Canada is predicting down the road. And there are also crises, the predictions that might surpass 2008 crisis, right? I'll show that map. I will give you a couple of examples from real people that commented on these channels, how they feel about purchasing real estate, how they feel with their income, right? Versus the affordability, and how they feel about the entire situation when it comes to our economy, recession, and how everyone feels moving forward, right? So Bank of Canada is most likely will have another rate cut drop in June, right? And their Bank of Canada is calling it an emergency cut. So every time we get into these emergency cut stages, right, that we had during the pandemic in the early 2020s, is obviously rate cut. They're trying to ignite that economy, that real estate sector, so things start moving. The affordability hopefully gets on the table. Now, there's obviously the catch-22, right, that we saw during the pandemic, right? They ignited emergency rate cuts, affordability got back on the table, and everybody started buying assets, real estate, and obviously it shifted the other way around. So we have other problems. Now, having said that, let's look at the actual graph. And this graph is let's first look at the 2008 and 2009 global financial crisis, and you can see that the actual mortgage delinquencies, right? And this is the arrears more than 90 days, like that's the pattern, right? They went through the roof, right? Through the roof in 2008, 2009, and 2010, right? But the prediction, what they're predicting here, and this prediction came in April and 2025, so it's the monetary policy report, and you can see that the prediction in the blue highlighted aside here, they're predicting that we will easily surpass the mortgage delinquencies, right? So what does that mean? People that do not pay their mortgage for more than the 90 days, right? And this is scary, right? This is very, very scary, but everybody looks rich. You walk down the street, you see all the nice cars, you see all these beautiful homes, everybody is dressing well, and in the meanwhile, everybody is broke. Their student maybe loans, their mortgages went through the roof, and I'll get into that, give you some examples how it looks like in today's market. So it is just crazy because most people, just standing on a corner of a street, they're saying, am I crazy because I cannot afford anything? Well, don't worry about it. They cannot afford it either. All right, nobody can afford anything nowadays, but I guess everybody is faking it until they're hoping that one day they will make it somehow, magically. The markets will turn around and they will get out of their debt just like that. Well, I don't think it's going to happen. So we saw this graph and it is very, very scary. Another big sector or a puzzle piece in our economy, obviously, is unemployment. And if we're looking at the graph, unemployment rate by province and territory, April 2025. And we can see that in Ontario, it's 7.8%. British Columbia, it's 6.2%. Quebec is at 6%. So we see that in these provinces, British Columbia and Ontario, which are carrying most of the weight in Canada, the unemployment is on the rise, right? So that piece of the puzzle, that last ingredient, can collapse everything, right? So let's not forget, there's not only one component that sinks a market, right, or a economy. There are multiple components that have to align, like, pre-construction condo units that are coming up, 40,000 and 30,000 in 2026. So we will have another 70,000 pre-con units due to like occupancy, right? People have to take possession of that. Who's going to qualify them for that? Who's going to appraise them at market value, right? They're talking about blanket mortgages and all of that stuff. Well, you take that, you're underwater. You don't close, you're at their arrears, you go bankrupt. You see what I'm saying? So there are really no solutions, right? So a lot of people, unfortunately, will suffer. 1.2 million mortgages as we speak. Every single day, someone is renewing their mortgage to a new rate or current rate, which is 4%, 5%, 6%. It all depends, right? Because a lot of people took lender A's, a lot of people took lender A's and B's, a lot of people took A, B, C, private, all kinds of mix and mash and different styles of mortgages, right? So sometimes, it is even hard to say what kind of rate somebody has because there's so many lenders and it's just crazy. It is crazy to think that people are going through this. And when I personally asked them, I asked them straight up, okay, so how do you do it? Because your income cannot support this. You cannot support, like I'm assuming I can predict roughly in your field how much money you could make. And that number does not match whatever you're spending on monthly expenses, right? And 99% of the time, they say, well, we are dipping into line of credits, we're dipping into more debt, we're dipping into all of that stuff. And I asked them, why are you doing that? Are you kidding me? You're accumulating $50,000 to $100,000 annually. Why are you doing that? And the answer is simple. Well, look, I don't want to do anything. I don't want to jump the gun. I want to sit put and it will turn. It has to turn. It has to turn where? Where is it going to turn? It is sinking already for 2-3 years. The peak was in 2022, and ever since, every single quarter was worse than the previous quarter. If you want to believe it or not, but that's what it is. I get it. Some people want to test the market in the beginning. We might have a bad season, but after that, we'll catch it, right? But look, if you have been sinking for 2-3 years and you added another, $150,000, $200,000 of debt on top of debt that you cannot repay, and then you are scratching your head and you're wondering, oh, well, I don't know what to do. Well, you're going to go bankrupt, right? So you're going to lose everything, unfortunately, and that's it. And the last puzzle is unemployment because it's rising. It is rising. So you better figure out something very quickly, come to your senses, and understand if you made a miscalculation, a mistake, or a want in 2020, 2021, or 2022, and you hope buying at the peak, that peak will go through the roof again from that peak, well, you miscalculated. All right, so you're going to lose money, right? But don't dig yourself a 12-foot hole. 6 feet is enough. Trust me. So that's what I'm saying. And I had this graph. I'm going to pull it up for you. And this is, smart money was in the early 2000s. If you're following my channel, obviously you have seen this graph. I've talked about this graph. It is phenomenal just looking at this graph, how things were developing, right? So in the early 2000s, right, the income ratio, affordability, and the prices and all of that stuff, just the entire atmosphere in the country felt right. You felt if you bought it, It felt secure, right? Just remember going back to the early 2000s. That's what it felt like. That's what it felt like to me, right? And then it took off, the first sell-off, because why the first sell-off, right? So the first sell-off was, 2005, 2007 maybe. And why? Because the people in the early 90s, they got the shock, right? So sometimes when you get shocked and when you start realizing that these things happen and it's real, Canadian real estate market is not bulletproof. It can go through corrections like everywhere else in the world, right? It's just we got babied for 2.5 decades, right? Like every chip you throw on the table, you make money, right? But sometimes, hey, the house has to cash in, and maybe this is the time now. Anyway, so looking at that, first sell-offs probably were the people that, they bought at exit at the early 2000 and then they were starting selling it off. They made their profits 20, 30% or whatever, 15%. And they're like, okay, enough, I'm out, right? And then the media attention, I talked about that, right? Like think about it, 2008, 9, 10, every single commercial, Home Depot, Rona, renovate it yourself, DIY books, how to paint, how to make a deck, how to lay floors, right? All these companies are pumping that marketing, and then it started booming. Enthusiasm kicked in. That was the next stage, enthusiastic, right? Remember, like you bought a house, you painted it, you put new baseboards, and you sold it for a profit. And everybody is like, wow, this is a dream job. Plus, it feels good. Think about it, right? Because it's tangible. Like you buy a house, you can touch it, right? You change 2 windows and you painted and you made profits of $50,000. Bingo! That's what I want to do for the rest of my life. That's it. I just want to change a few windows, paint, change a toilet seat, and I want to make 50 grand, right? So everybody imagine themselves being builders, developers, flippers, know-it-all people. And at that time, whoever I was speaking to, they had a truck, they were painting, they were making all this money, and it was nuts. It was good, right? Because there's a lot of money there, but it was incredible, right? So, moving. Greed, delusion, right? And then finally, no limits. We hit the no limit part, which I could not understand. In 2021, I spoke to mortgage brokers. I spoke to real estate agents. I spoke to people that bought at the whatever. And I asked them, are you sure this small bungalow that needs $200,000 renovation, you are paying $1.5 million? It's 750 square feet, right? It has mold in the basement. You need a mask to walk through the basement. And you paid 1.5? And you know what the answer was? Well, look, the demand is high and it will continue. I'm like, where is it going to continue? Like, do you really believe that this property will see more gains? At that time, 100% everybody did believe. I don't know how, but they believed it, right? Now, denial. When the market turned the other way around, right? It was denial. It's a blip. It's a small cloud. It will pass by. Don't worry about it. It's okay. It's the dip. Let me buy another one. Boom. When the lights start turning on back again, I want double the profits. Double down like in a casino, right? And then return to normal. That's what happened. For a while, like we felt that, 3-4 months, I would say in the 2023, there was a period that everyone started feeling, okay, so the interest rate started right now, we're back to normal. Like that's what it feels like, right? Back to normal. We can write it out. They have to do something. They have to fix it, right? I'm not cutting my price. I'm sticking to that, and that's it, right? And whoever you spoke to, like they were like, no, man, like market is back, man. What are you talking about, right? And obviously Then we went to the fear mode, that everybody started listing, fearing, but not reducing their price. You're scared, but I'm not going to reduce because I want to get paid. Remember the no limits? I paid 1.5. I invested 200,000 in that bungalow. It's 1.7. Paying all the commission costs and closing costs. I want 1.9, and I'm sticking to that. Like, dude, your house is worth 1.2. Best case scenario, if you're lucky to find someone. Nope, I want 1.9, right? So they went through the fear inside. You feel it, but they wouldn't let go, right? Then stuck mode. Oh no, I'm stuck, right? I have to renew my mortgage. I took a 1-year mortgage, took a 3-year mortgage. Now I have to renew, right? I went with the low 1s and 2s. Now I'm in the 4, 5, 6s. What am I going to do right now? Then the debt ratio and the race and all of that stuff, it's starting to catch on, right? And that's what happened, right? And now some of the people are in the stage of surrender mode, right? And I don't think we're even there yet, to be honest with you, right? Because some people are listing, relisting, holding, hoping magic will happen, something will happen, somebody's going to knock on their door and just gift them $1 million. Somebody in their family will pass and they'll inherit $5 million and everything will be fine. Like things like that. People are dreaming, and it's okay to dream, but you have to have a concrete plan, right? Unemployment is rising. It is on the rise. We are, hovering 6%, 7%. We get to the 9s. Game over, right? And the prediction is worse for the mortgage delinquencies than it was in 2008 crisis. They're predicting it to be worse, right? So it means like it's a bottleneck. That's it, right? No moving forward. You have to look at the situation and decide what you're going to do. Bankrupt or figure it out. I don't know. All right, so let's move to the next. I'll give you an example what that looks like for a $700,000 mortgage amount, right? So a monthly mortgage payment for a $700,000 loan over 25-year amortization rate at 1.75% interest is $2,882.52, and at 4.25% of interest is $3,792.17. There's a difference of more than $900. Now you say, okay, hold on a second. That's not a big deal, right? And I agree with you. It is not a big deal. However, that's not the only thing that went up, right? If this was the only thing, I would say, okay, look, maybe that $900 you can somehow figure out, right? And that's close to $11,000 per year, right? Okay, how are you going to find that $11,000 annually? I don't know. But if insurance didn't go up, if gas didn't go up, if groceries didn't go up, if life in general didn't go up by 10, 20, 30, 40, 50% in some areas, I would say, okay, this is not that big of a deal. But people are struggling to make a difference of $100 to $300 a month. That's a real issue. And they're still dipping into their savings and they're still hoping. Now, I spoke to somebody today and they said something that kind of it stuck to me, right? And I spoke about this, unemployment and debt ratio and all of that stuff. And you know what he said? He said, like, look, some people are ashamed and they cannot say no. They feel like they have to be a yes person to everything, regardless. If they go into debt, like, let me go, but I cannot say no. You know what I mean? Like if a friend calls you for a wedding and down to the Caribbean and it's going to cost you $3,000. You don't have the funds, but you'll say, oh, I'll come. It's okay. Don't worry about it, right? Because you don't want to stick like a sore thumb. Or if your kids say, well, I want to go here and there and it's going to cost you $500. And you say, it's okay. Well, let's throw a $1,500 birthday party. So you kind of like they feel ashamed somewhere inside to say no because they were used to spending and having for a long period of time. So now they're just writing it up. All right, so let's read some comments. All right, so these comments were from my channel, from some videos on my channel. I just went randomly, I selected, and the topic on the video was, what can you afford for $100,000 or $200,000 of income and all of that stuff, 1 hour from Tron or in Tron and all of that stuff. So let's read the comments. So truth is, household making $125,000 isn't buying a house in GTA. You can climb property ladder when the ladder is falling. Climbing property ladder only works if your property is appreciating. Very interesting. Need $200,000 of household income or only condo. Everyone now needs to be a lawyer, doctor, finance, or IT. Very sad times. I appreciate the comment. All right, let's go into the next comment. My spouse and I make combined $220,000 income a year here in Vancouver, and we can barely afford an entry-level townhouse. Single detached is likely a dream for most people these days. That is incredible. Think about it. Making more than $200,000 and you can't even scratch for an entry-level townhouse. Crazy. Thank you for the comment. All right, so my family makes $260,000 a year and we are stuck in a condo that cannot sell. It takes many years to save a down payment, so we are locked out of getting a townhouse. Canada is, all right, so you already know. So basically the affordability level and everything that is happening, it is happening. And these are real people commenting. Like, this is not a made up story. These people make money, but there's nothing that they can do with this money. All right, so great video, very informative. It's very sad. I haven't had a raise in years. I can't afford to buy a house. Family income $175,000 and we don't go on vacations or have debt. Our rent is still pretty low, $2,200 per month. Keep that rent still low. I don't know where you are or what you're renting, but it seems pretty low. Unless we both get jobs that are completely remote, we can't move further away. Our jobs are 20 minutes away. Before that, I was an hour, but we financially found work closer to home so we can save money on gas down one car. So this couple or this person, they figured out a way how to find employment closer to their house, because there's one point people were escaping or leaving the core of the city. And at that time, maybe it was good because it was less traffic and remote working from home and all that stuff. But now things changed, the landscape changed. And trust me, when you have to drive an hour or more than an hour to your job, it gets tiring. If you work, 8 or 12-hour shifts, driving back in the morning an hour, driving back an hour, oh my gosh, it's exhausting. No life whatsoever. So they also got rid of one car, which obviously helps with the cash flow monthly. All right, thank you for the comment. I have no idea how anyone gets onto the property ladder in this market. My wife and I are both professionals who bought our starter home 10 years ago. Congrats. We each make 6 figures, have zero debt, and there's no way we can afford to even trade up. Isn't that sad, right? So it's stagnant market, right? Which means one less starter home on the market for a young family. Very sad. If the government's going to get onto the business of building, do it by building minimum 1,500 to 2,000 square foot, 3 to 4 bedroom houses that people can afford, so there is enough space to feel comfortable and the home is desirable for long-term ownership. Yes, thank you for the comment. I appreciate it. And that's what we're missing, right? All along the way, condos were going up, towers were going up. I get it, right? But these units were mostly geared towards investors. That was the game plan. But unfortunately, now we have thousands and thousands of them sitting empty or sitting on the market for sale. Nobody's buying because what are you going to do? If somebody has a dog or a child or something like that, they cannot live in that shoebox, right? Especially with these prices. Maybe if the price is at $200,000 or $250, even for the shoebox, somebody will say, well, okay, fine. I'd rather have that and my monthly expense to be $2,200, but at least I'm starting something, right? But if it's costing you to rent $2,800 a month or to buy, $3,900 a month, the math just doesn't add up. So thank you all for commenting. I appreciate it. This channel is definitely vibrant. The community, people are commenting. People are trying to share ideas, what they have developed, how they're trying to get out of this. Everyone is commenting, and I want to thank you all. So please like, share, and subscribe, and I'll see you in the next one.